Welcome to the Send More Offers Real Estate Show with Brandon Barnes, showing you how to do wholesaling deals consistently without having to go on seller appointments. Learn the key tips and strategies that Brandon's students use to find deeply discounted properties that are pennies on the dollar, all while avoiding wear and tear on their vehicle, body, and freedom. Whether you're looking for your first deal or your next deal, it's time to send more offers with your host, Brandon Barnes.
Hey, welcome to the show, Martine. I'm super excited to have you here.
Thanks for inviting me. I hope I can add some value to your audience and they take action on this juicy information I'm about to give them.
Yeah, I know you'll add value because that's what you've been doing since I met you. We go way back, same coaching program 5 some years ago. I know I started in 2016, 2017. You came in a little after me. When did you start your wholesaling journey?
I started in 2014.
Okay.
I didn't get into the program though until later. Because I remember you were in there before me because you used to give me tips on how to close.
Yeah, but no, I think your claim to fame was like you used just the podcast to do your first deal. For anybody out there that thinks that this is rocket science, like literally Martine is living proof that just with a little bit of instruction, right, you can go out and do deals and change your life.
Right. So, yeah, I actually did my first 5 deals listening to the podcast.
Jesus.
Yeah, I was going through a drought and then it just started raining because I started listening to the podcast.
Yeah. Do you remember what your marketing channel was back then?
Direct mail.
Okay.
Direct mail. And I just remember direct mail, I started with that and I wasn't having success with it at first, but I just kept listening to podcasts. And they said that they would keep mailing the same people over and over. And I'm like, oh, you mail them more than once? And that's when it started working for me.
Yeah. No, that's amazing. And look, direct mail, I don't think ever left. I was about to say it's had a resurgence because people are seeing that it is still a good marketing channel for off-market deals at a discount. But, definitely it's one of those things that, like you said, you have to stay with it. And I like to say most all of these channels work if you're consistent. And so I know I pivoted to cold calling. Did you ever get into any other channels yourself or?
I did. And I think the transition for most people, including myself, is because the other channels were cheaper. Because like direct mail, it costs a pretty penny. Like I know it's like 40, 50. I don't know how much a stamp even costs anymore. But you have to pay that for each contacting. We have to contact thousands of people. So like it gets up there. So yeah, I did cold calling for a little bit. You really gotta get that tough, thick skin with that cold calling.
Definitely.
I did some text blasting. I did a little bit of Facebook marketing as well. So I've have experience in a lot of different marketing channels.
Very cool. And I know that's not what we're here to talk about, right? You've been doing some very interesting things. You've been building real wealth. You've been acquiring properties. And that's what we're going to be talking about today. But this all started, and I want to just make sure to highlight that this all started with, going out, taking action, and reaching out to off-market property owners to try to offer and purchase their home at a discount, wholesaling, cornerstone of all real estate investing. And, you're a testament to that. So when did you make the transition from doing wholesale deals to what you're doing now?
So I'll say that you get the absolute best education through experience, whether that is from your experience or someone that's helping you their experience. But I got my first property I kept by accident. And it's crazy I say that, but it's the absolute truth. And thank God I made that mistake. So I used to go in everyone's house and ask them, do you want a cash offer or would you take payments? And almost everybody said cash offer. But one time I went in a house and the guy said, I'll take the payments. And in my head, I'm thinking, you take the payments, nobody takes the payments. So
wait, before you go down that path, where did you even get that from? Because that wasn't really, I know that wasn't a big Tom thing. Was that just natural?
You want to know who I got it from?
Who?
Todd Toback, his brother. His brother, I don't even remember what his podcast name is anymore. I was like a podcast junkie. I used to listen to them all.
No limit cell
yeah.
system.
And he would tell you exactly what to say in the house. And I said, oh, say less. I'm saying this. Let me remember this. I'm saying this. So, I went to someone's house. I said, would you take the payments? And he said, I'll take the payments. And then I'm like, okay, well, let me see how I want to structure it. And in my head, I'm really thinking, how do you do this?
What the
How do I do this? Nobody ever has taken the payments. So what I did is I went to a meetup. And when it came to question and answer period, I said, hey, guys, went in the house. He said he'd take the payments. I don't even know how to structure that. Can y'all help me? So they helped me structure the deal. I went back to the seller and told him what the structure was. We negotiated a little bit. But then we came up with our terms, and I still own that property today. What we did was a lease with an option to buy. And I think like my option to buy on that property, well, I know my option to buy was $35,000, which is kind of like unheard of now. But back then, that $35,000 was a lot for their neighborhood because it was the hood, just to be frank. Yeah. But now I just want to emphasize, and Brandon didn't say anything about I buy and hold properties, but that's what I do now. But that house now is worth $240,000. Wow. And that's the power of holding. I didn't do anything. The real estate did the work. So that's why I'm so adamant and so like gung-ho on you have to hold properties. You can build so much wealth if you hold more. I say hold all. I know Brandon's not going to agree with that. But
well, no. I'm not anti, but what I do is just help people at least get the basics started, right? Mm-hmm. With, wholesaling. And I do still think that there is room to, wholesale and sell off the properties that makes sense to sell, but, cherry pick your pipeline. Like I'm still a big believer in that. But you can have a cash flowing business just, wholesaling. Right. But to your point, cherry picking your pipeline is great. To give us a better sense of the time period of all of this, when was that deal that the guy took the payments? Do you remember what year that was?
Yes. Yeah. So I started in 2014. I believe that was 2017. Wow. And it's 2024. So it's not like I haven't been doing this a long time, guys. Like, how you'll see some people, they bought houses in the 70s and now it's like 10 times worth what it was. No, this was like a couple of years ago. Like this wasn't that long ago.
Yeah. So walk us a little bit further through that. So when you say, you did a lease option, did you have to, was it vacant? Was there a tenant? Did you have to put a tenant in it? How did you go about doing that?
So what I did is it was vacant and it needed a little bit of work. So I basically, how I convinced him to want to do this is he was a landlord. And he got into landlording because he wanted passive income. And he wasn't getting passive income because he kept getting sucky tenants and they would be tearing up the house. So I told him, what if you didn't have to worry about any of the maintenance? You have a guaranteed payment. And he loved it. So what I did is I did a sandwich lease option where I have a lease option for that property and then I get a tenant buyer, as they call it now, that is going to lease option that for me. And, they can decide if they want to exercise it or not. But the way I had structured that is I paid the guy $500 for the option fee. I was paying him $400 a month, and I had negotiated that part of the payment would actually go towards the purchase price of the house. And then I was buying it within a certain amount of time. I think it was 3 years for $35,000. Then the person that I was letting lease this, they had to pay $5,000 down. They paid me $700 a month. And then their option was to buy it for $60,000.
Got it.
And they didn't have the entire 3 years. They had like 18 months.
Got it. And so how did it end up playing out? What was the end result? I mean, I know you still have it. So apparently they did not pick up that option. Mm-hmm. When your 3 years was up, did you have to cash them out? Were you able to pay that on, over time?
Oh yeah, I had another property that I had sold because I just wanted to kind of test the waters to see how much I could get.
Mhm.
And when I did that, I bought like 3 properties from selling that one,
Nice, nice, nice.
and that
Very
was
cool.
one of them.
Got it. Got it. And so, and when you say, sold this other property, was that like a wholesale transaction or was it something else that you acquired and then sold off?
So it was more like a hotel,
Got it.
where I bought it, and to be honest, I had planned on fixing it up and keeping it.
Yeah.
To be honest with you, but it was like on a really hot street in Richmond,
Mhm.
and I wanted to just test to see how much I could get,
Yeah. Yeah.
and they just
You must have
bid
hit it.
that bad boy up.
You must have hit it. Do you remember what the spread
Yeah.
on that particular deal was?
Yeah, it was. I don't have the exact number, but I remember it was like $100,000.
Sheesh.
Yeah.
Love it. Love
That's
it.
why you
Love
should
it.
get in real estate, guys. Like, stop playing, stop listening, stop the podcast now, and go
Right.
do some deals.
Right. I mean, yeah, because look, hotel deals are amazing. The biggest wholesale deal that we did was close. It was like 83, 84 grand
Mhm,
on a wholesale deal. But
mhm,
just because, we've talked about a lot of different terms, lease options, sandwich lease options, and, we can kind of break some of that stuff down as we continue to go. I want to make sure the difference between wholesale and hotel, right, is, when you wholesale a property, you're picking it up the same way you normally would a wholesale property, but you're selling it
mhm.
retail, usually with minimal work involved to the property. So it's not a renovation. Maybe you cleaned it out, maybe paint or carpet,
May-
maybe. But,
Maybe you're like Martine and you had a yard sale. They had a lot of
yeah,
good stuff in there.
yeah, or like that, like, having a yard sale, that's even better because you made some money off of the stuff that was in the home and then listed it on the market and it sold
Mhm,
retail, so wholesale.
mhm.
That's awesome. And so when did the switch happen for you? Like, hey, I'm going to be exclusively a buy and hold investor and build out this program of how I do it and show others how to do so.
Right. Well, when I mistakenly got that rental property, I kept getting checks like month after month for work I did a long time ago. And in my head, I'm thinking, man, this is great. How can I do more of this? So it got me looking more into, well, how could I buy more properties? And then I found out that I didn't have to use my money to buy these properties. I could use private lenders' money to buy these properties, and I could fix them up and rent them out. And then if I got them for low enough, I could get money back when I refinance, which would have been that fee I would have gotten if I would have just sold it anyway.
Mm,
So I fell in love with it. Like, I just loved how you have to do work once to get paid for a lifetime. And I
yeah.
loved it. So I just really dived in, really like nailed in, focused on how do you do this. And I started pursuing that because it made more sense with my goals. I
Yeah.
got into real estate because I wanted freedom and time. And
Right.
wholesaling wasn't providing that for me.
Yeah.
I wanted to get passive income. So that was providing that, and that's what I started focusing on.
Yeah. Did you ever, because I don't know if I knew this, but when you were, getting the ball rolling, wholesaling, doing deals left and right, did you build out a team to do so? Do you have a team now? Tell me about
So
those two different
at
times.
once, I went through a period of building out a team, and to be honest, being disappointed in the team. Just to be honest with you, just not hitting the goals that I thought that we could hit. And I mean, I went through this a series of times. Now I had a VA, but to be honest, my property management is so like on autopilot. I really didn't need her. We don't really have a lot of maintenance requests because we're very proactive in terms of getting things done. I know who I need to call if something is broke. We'll just go out and fix it. And then we just do a really good job vetting our people so that, we can stay out of eviction court.
Yeah. Yeah. And now, so, there's different types of ways to, have, buy and hold assets. I know a lot of guys that are selling their properties, their rentals, or they're making them available on terms, with an option to buy, rent to
Mhm.
own, just doing stuff to where the tenant isn't, necessarily a regular tenant. Maybe they actually have some skin in the game, some ownership. And so you don't have to worry about maintenance. Have you gone that route? Have you considered doing something like that with some of
I
these properties?
have. So I have done that previously, in the past, but I don't prefer it because when things get ugly, the court cases are very long. I've had two that were very long because of those types of deals. And it's like the people that are in the house, they feel they have some sort of equity ownership because, I was seller financing it to them or I was doing this or whatever it may be. So I would prefer to just keep it and enjoy the benefits
Yeah.
of being the landlord, just to be honest with you.
Yeah. I want to say, I forget what we can talk about this offline, but I want to say it was like a land contract or something, to where at the end of
Yeah.
the day, they still were able to do any evictions, or they didn't have to foreclose formally. They were able to, do it through some type of land contract to make it a little bit more flexible and beneficial to the original owner. But
Right.
in any way, like, I think you're still highlighting the benefits of having, residual income from
Hmm.
owning the properties that you're finding through our marketing and wholesale methods. So let's talk about that specifically, the marketing piece, because, you know, I'm sure you're not out there buying on market through an agent. Maybe a good deal comes across every once in a while, but
Right.
majority of the deals, if you buy right, they're going to be directly through an owner, or maybe off market through an agent. How are you
Mhm.
finding the deals that you're adding to your portfolio now?
Oh, this is a great question. So, me, I don't do any marketing anymore. And I think people will say, well, how in the world are you finding deals? I have built a referral base that people in any type of business that are close to me, they know what I do, so they know what to send me. So I'll give you an example. We have a property. Well, I have a property that I bought that someone in my family sent it to me because they know I buy the ugly houses in the nice neighborhood, and they saw
Mm,
that this house was ugly, and they sent it to me. I looked up the person, got in touch with the owner, and we ended up cracking a deal. That's a decent lead, I would say. Icing on the cake lead, and which I've been getting as well, is when someone knows the person is about to sell and they know that I like that type of house. So they give them my telephone number and then
man.
I talk to them on the phone and then we crack a deal that way. That's
Mm,
even better because it's nice and warm. They got a lead from somebody they know. And I do the same thing for other people. So what I do, I like to call it like the law of reciprocity, which basically is I network with people intentionally. I try to find out what they're looking for so I know what to send them. When I come across it, I send it to them. Or if they need a connection and I already have it, I connect it to them. I give, 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 give. And giving is like breathing. You can't exhale, 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 and never inhale. You will die. So
man.
that's the same with giving. If you give, 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 you will start to receive. And doesn't necessarily have to be that same person that's going to give me the deal. It's just that I'm networking with a group of people and they send me what I'm looking for. And it works out really well. Like, cause like sometimes I'll get a little overwhelmed with the amount of projects we're doing. So like, I'll kind of lay off my networking a little bit. But then, like when I'm ready for something, I'll start picking it back up because it seems that I get it as soon as I'm looking for the most part.
Yeah. And so when you say that I pick up my networking, what's the first thing that you're doing? Is it social media, or do you go to meetups? Do you just start speaking a little
um,
bit more at the grocery store? What do you mean by that?
Well, what I mean is I call and start checking in on people, seeing how they're doing, seeing how I can help, going to lunches, going to meetings. Going to the networking meetings is fine, but a lot of the people that send me deals, they aren't real estate people. Like they're not in this business at all. And they just know that if they see something that I'm looking for, they send it to me. So I just started being a lot more intentional with talking to people and staying in touch and staying front of mind.
Super smart. Super smart. Love it. So, you've mentioned, getting on the phone with somebody and crack a deal, right? This still, and I want the listener to really, get something from this, because I'm sure there's a bit of negotiating, talking about numbers, underwriting that goes into this, that are still core skill sets from your time wholesaling, or anybody that is, finding off market deals and trying to turn them for a profit, right? So are you going into these conversations, thinking creative finance? Do you just take what the seller's giving you? How are you structuring the deals at this point in time, as soon as you get one of these referral leads?
Well, a lot of the times when I get these referral leads, you got to warm it up. You got to build the rapport, get them to like you and stuff like that. And you try to get them talking more and seeing what they want. And let's be honest, most of the time they all want too much. So I like, in my negotiating tactics, when I'm talking to someone and I'm giving my first offer, I like to give a total of 5 if we get there. And most of the time we don't get there, so that's great. Meaning they accepted a little earlier. But
when you try to give them 5 offers.
So I start with basically, it depends, but I would say typically I'm at like a $20,000 spread lower than what my high is going to be. Let's put it like that.
Got it.
So I'm not giving multiple offers like, oh, well, do you want seller finance? Do you want no, I don't mean that.
Okay,
I mean that I come in and I'm like, well, what if, and I got this from Todd Toback as well. What if, I was able to, I'll give you an example. It's a house that these people wanted $155,000. It was the assessment of the house. And I'm like, no way, this house looks terrible. I'm not paying $155,000.
Right. So
like, I'm starting the negotiations and I'm like, well, what if I was able to give you like $60,000? That's probably a terrible idea, huh? And I just shut up. And then they're like, $60,000? Like, that's entirely too low. And then I'm like, well, what's the best you can do? And then a lot of the times they'll start negotiating themselves down. And so then once they go down some, I'll go up some. This particular property, I ended up leaving a written offer for $85,000. And I left because I wasn't going any higher.
Right.
And this lady called me back a couple of hours later and said, we take it.
Nice. And in that particular instance, was it a cash offer?
It was.
Okay.
Most of my offers are cash offers.
Okay. And then you're leveraging financing, because that's the next thing I was going to get into. So say there's somebody right now that's listening that, they're already doing some wholesale deals. They may have a good network, or they can, network intentionally and say, hey, I want to start taking some of these down. I don't have so much capital. My credit is, fair, right? I want to do this just like Martine. How would you advise that person to approach these deals? Is it cash offers or terms? And then if it's cash, how do you finance from there?
Right. So I like to look at things with the end in mind. So like if your credit is fair and you don't have that much money, that means you need some money and you might need to work on your credit, possibly, if you're going to refinance this later on down the road to keep it. So that's one thing I would look to do. If I was in a position where I wanted to start taking down some of these, I would really start networking, building the relationship with people that lend money. You could start with people that lend money, just going to meetups in your area. And I'm not saying with the hard money lenders. You don't have to do business with the hard money lenders. I like to use private money when I'm closing on my deals. And a lot of the people that are doing private money, they're not really raising their hand saying that they're a lender. What I've noticed is that if you go out to these networking events and you truly try to connect with people, see where they're at, see what they're looking to do, tell them where you're at, where you're looking to do, you can genuinely find some win-win relationships. And so I would encourage people to do that. Once you get their contact information, reach back out to them and have a conversation of seeing what they want. And the secret sauce would be inviting them to lunch. I've built so many relationships just by going to lunch with people and finding out a deeper level of what they were looking to do. They might not have been comfortable telling me at the meetup, but we go to lunch, they're eating their food, they're feeling great, they start spilling it all. So, and if your goal aligns with what they're looking for, you need to speak up and tell them how you can help them, how you can help them get a better return backed by your real estate investments. And especially when you're good at finding deals. This won't work if you're bad at finding deals. And when I say bad at finding deals, like you're not getting them at a discount. But if you're getting deals at a wholesale price, in my opinion, you're doing yourself a disservice by not talking to these lenders and if it's a deal you really wanted, talking to these lenders and getting them to fund your project and keeping it. You could get that wholesale fee that you were going to get when you refinance it. So, and you keep the property and you cash flow. Why wouldn't you do this? This is what I'm saying. I think it's just a lack of education. And then maybe somebody have heard, that somebody had a bad experience with a tenant. So, they didn't know how to fully vet the tenants or whatever the case may be. But I just think it's a lack of education or experience, because in my opinion, this is the best way to do real estate. Why wouldn't I do it this way? But in terms of your credit question, if you have a 620 or above when you are doing the final refinance, so like when you buy it, you're going to use a lender, right? And they don't care about your credit. They're not going to look at your credit. But once you fix it up, you get a tenant in there. If you're doing your long-term financing, depending on who you're using, if you want to get a better rate, usually they will look at your credit. But they will do a credit score as low as 620. And if your credit score is not a 620 yet, start taking actions on making it better. When I got serious about real estate when my car got repossessed. So you can guess what my credit was. It was shit. But now, since I fixed it, I continue to do the things that I needed to do. Now it's in the 800s. That could be you. That could be you. Like, I'm not an extraordinary person that I can do these things. You guys could do these things too.
Love it. Love it. Good stuff. So when you're dealing with your private lenders, are you targeting a certain rate scenario? You're just looking out for 12 months, give you enough time to stabilize and then refinance? Like, what are you trying to set up usually?
Yeah, so most of the loans are usually 6 to 12 months. I'd say in absolutely 12 months, I usually can get everything done that I need to get done. 6 months, sometimes, depending on the project, it's like not enough time, because sometimes the projects take a little bit longer. And I would kind of listen to where the lender is when determining what type of rate. And this is what I mean. Like, if you're talking to a lender and they're like, well, I got my money in stocks and I'm making 6%, which is probably low for stocks, but just an example. I'm making 6%. Then I would say, well, would you be interested in, having your money backed by real estate on a property that's worth more than the amount of money you're giving me? And I could give you 8%. Mm-hmm. That might make them think a little bit like, right? And then lenders, what they care about is what type of rate they're going to get. They want to know security, so that, having the money on the property. And also, they want to make sure you know what you're doing, that you can fulfill what you said that you're going to do. And then they want to know, how are they going to get their money back? So in my instance, they get their money back when I stabilize the property and then I refinance their money out. And then I use their money again for another one. And then we do it again. And then we do it again. And then we do it again. So, and they love me because their money is making a significant return. And I'm building my portfolio, not using any of my own money.
Love it. Love it. The last question about the lending and funding piece, long-term, lenders, right? You hear, certain banks have a cap on how many properties that they'll let you, finance through them. Have you found some investor-friendly long-term lenders? How are you tackling that problem?
But of course, that's a great question. So if you go to the bank and you're doing like the 10 investment properties with Fannie and Freddie, then yeah, you're capped at 10. And usually those are in your name and stuff like that. Those aren't the loans I go for. It's nothing wrong with going for those, but it's just not what I go for. If you're going to go to the bank, you can get a portfolio loan. And that's when you're, refinancing your entire portfolio, and they don't care about how many you have. And I tend to not go for those either. And the reason I would say why is that I don't want all my properties grouped up. I like them individual loans. So if I wanted to do something different, I could. And then also it's just like it's a lot more criteria when you're going through the bank. What I like to do is I do the debt coverage, the debt service coverage ratio loans, so the DSCR loans, and you can have as many of those as you want. All they care about is what is your credit score, and it's just 620 or higher. They want to make sure you have money in your bank account. I don't even think that they care like if it's an amount of reserves. They just want to make sure it's not overdrawn.
Right.
And then the property has to support itself. So when I say the property has to support itself, usually your rent has to be at least 20% more than what the expenses are going to be. And the expenses would be that mortgage they're putting on there, plus the taxes and insurance. And as long as your rent is 20% more than that, then you're good. You're good. You can just make it work. And I will say that I'm probably very blessed and fortunate because I found like the most amazing mortgage broker in the world, because I went to so many banks and they would just tell me why they couldn't do something. And I don't like people like that. I don't want you to tell me I can't do it. I want you to tell me, how can I do it?
Right.
So that's how my mortgage broker is. And I really, truly love working with him because that's who he is. He wants you to be able to build the wealth that you're looking to build. So he's going to say, okay, well, if this isn't right, fix this. And then we're going to submit it like that. And he comes up with solutions. So I appreciate that. And I think that makes my journey a little bit easier, just to be honest with you.
Very cool. Good stuff. Well, look, I'm sure you have tons of stories. This is the Deal Diaries section of the podcast. But if you can think back to a situation that might have, give us a day in the life of one of your deals, funny, crazy, big deal, otherwise, how would something like that go? Can you tell us about one of your deals?
Sure. So I'm going to start all the way with how I got the deal.
Okay.
So I pulled a code violation list in one of the counties nearby, and I mailed all of these people, and I got a call back from this lady that happened to be in foreclosure. I wasn't targeting foreclosures, but she happened to be in foreclosure. She lived in a really nice house. She only had been living there for like 2 years. And I'm like, dang, you're in foreclosure already? Dang. But anyway, she was going through foreclosure and she couldn't afford her mortgage. And the reason she couldn't afford it is because she had a co-signer. Her son-in-law co-signed with her on this loan so that she could afford it. They had a big falling out and he said, forget you, I'm not paying your mortgage no more. I was like, damn, that's messed up. But anyway, so I'm trying to help this lady. She doesn't make that much money. She only has Social Security income. So my first thing that I want to make sure is that this seller is going to be okay. I don't want to buy your house and you're out on the streets.
Right.
So she was an older lady too. So I found a retirement home that was based on your income, and she had to be on the waiting list, but she got on the waiting list. She filled out all the paperwork. And then a couple of months later, finally her number was called and they're like, hey, we got a spot for you. And I'm like, great. I'm glad this foreclosure process is slow.
Right.
Because this wouldn't have been good. But anyway, I pick the lady up. I take her over to get signed up for her new apartment. And the leasing office lady is like, oh, well, we just need you to fill out some more paperwork because we just missed giving you these things. And this lady has a fit, a total tantrum. Like, no, I'm not doing any more paperwork and just having a fit. And I'm like, are you serious? Like, this is about to be 30% of your income. Do you know how much money you still would have left? You're not going to be on the streets.
Oh my goodness.
So she has a total fit. And remember, I said I took her there and she refused. She did not sign these papers. She didn't want to move into there anymore. They required too much paperwork. So we're driving back and I'm laying this lady out. I can't believe you. You about to be on the streets. We found this. I'm really letting her have it. We had this type of relationship at this point.
Yeah.
So I'm really letting her have it. And she decided not to sell the house. She was going to wait for them to foreclose. And I said, okay, well, if that's what you want to do. So I was going to do a subject to the existing mortgage on that property because her mortgage was at a good rate.
Yeah.
And she didn't have a ton of equity in the house because she only had been living there 2 years.
Right.
But her mortgage was at a great rate where I could make a cash flow spread. So that worked for me. Anyway, she said, no way, I don't want to do it. So I'd say, I don't know, a couple weeks go by. Her son-in-law calls me, the one that was on the mortgage. And he said, hey, I'm moving for work. And I had another investor buying my house and they're falling out of the deal. Would you buy my house like you were going to buy my mother-in-law's house? And I said, you betcha. Are you kidding me? I don't have to convince you to do it. Of course. Right. So I ended up buying that house and I actually lived in that house. Really? So like I bought that house with none of my money. All he needed was $3,000 to move. And I borrowed that from somebody else. I told him exactly what I was doing. It was a 6-bedroom house. And it was just, at the time, I wasn't married. I didn't have any kids. I rented out those other 5 bedrooms to college students. And I cash flowed and paid the mortgage. And then later on, I got married. And well, actually, the funny thing about this is the day that I got married, that house closed for me to sell it. And the only reason I decided to sell it was because I lived there for a while. So I wanted to take advantage of I didn't have to pay taxes on the gain. Mm-hmm. So the day I got married, that house closed and we made $100,000 on that house.
Jeez.
So, oh, you got sound effects on here.
That's amazing. That's very
But yeah,
cool.
And that came from holding it because if I would have just sold it right away, I wouldn't have made that amount. I had to wait for the market to change some. But
I mean, that was an amazing wedding gift.
That lady. I know, it was amazing. Like, I don't know if you saw my wedding post, but it was like, you know, we just bought an asset and we did this and we just got married today.
No, you know what? I remember when you got married and I remember seeing the picture, but I don't think I dug into the details. But that is an amazing wedding gift and way to start things off. So, my goodness.
It was nice.
Do you know whatever happened to that? Do you never?
The lady?
Yeah.
I think she got foreclosed on, but I mean, hey.
And just.
I tried to help you. I can't help people that don't want to help themselves. But
I
really think
1000%.
that but I really think I see why she got into this, argument with her son-in-law. Because she wanted things to be her way. And I mean, I get it to a point, but like, I really helped you find another place that you could live so you wouldn't have to be on the streets. And you didn't appreciate that. And you got mad because they wanted you to fill out paperwork? Are you kidding me? I would have filled out the paperwork. Just tell me what to write.
Right. Right. That is wild. Well, look, this has been amazing. All the information that you gave us. I mean, really, it's going out and leveraging what we already know of how to go out and find off-market properties, and then leveraging your network, right, to have lenders really in your backyard, in your back pocket, so that you can take advantage of some of these opportunities, whether it's a cash transaction or seller finance, subject to something like that. Just leveraging these relationships to hold deals for the long term and really, really build wealth. But look, I can't let you go without putting you through the lightning round. Are you ready for that?
I'm ready.
All right, let's do it. Cool. So look, I got a series of rapid fire questions for you. You don't know the question. I don't know your answer. So just say the very first thing that comes to your mind. Okay. What's one book that's been instrumental to your growth as a real estate investor?
Since I'm very relationship based, Michael J. Maher book. I cannot think of the name, but he wrote it. So just look him up.
Okay. I will check that out.
It's about building relationships. It's for real estate agents, but you can use it as an investor too.
Okay. Love it. Love it. If you could have drinks or coffee with any one person, dead or alive, who would it be and why?
Well, in my head, this guy's my friend. I even gave him a nickname, the Beezy, Warren Buffett. So yes. Warren Buffett.
Yeah, that kind of goes without saying. Awesome. What's your best advice for someone looking to do their very first long-term buy and hold deal?
If you don't have any experience doing any sort of real estate, I would encourage you to either partner with someone that has some experience, work for someone that has some experience to learn, or get a coach for someone that that has the experience so that you can learn before you get into a situation where you could possibly end up losing money. So just try to get some experience under your belt from doing one of those things so that you can be able to be successful at it.
Love it. Good stuff. What's one mistake on a deal particularly or business in general that if you could do over, you would take that do over?
It's a house I had. I was just talking about this to somebody. I had a house that I was intending to keep. I had already rented it out. I ended up actually not having that great of a tenant. I think this kind of influenced my decision. But we get to the refinance and it doesn't appraise for what it needs to appraise for. And I decide to sell it. I regret doing that. I wish I would have kept that house. It was a nice cash flowing house. I wish I would have just fought the appraisal or went with another company or something like that.
Yeah. Good stuff. I didn't ask this earlier. This is one question I've meant to ask and I forgot. Just vetting tenants do you like a particular software or is it just like a multi-layer step that you do person by person?
So what I like to use is apartments.com and I'm hoping that it's still free. I'm not sure because I was on it when it was cozy.co because it's still free for me, but I don't know if I got like grandfathered in or something. But it's free property managed software. And then you can, look up someone's credit, their background check. And when I'm vetting tenants, I like to look at their landlord history because I feel like that's crucial. If you're not going, like the landlord that they're currently with, they may lie a little bit because, they're trying to get rid of them. Right. But the landlord before that is going to tell you the truth. Yes. So it's good to just be, get this information while you're vetting your people.
Love it. This next question is typically like, what's your financial goal for your team for this calendar year? But I'm going to alter that a bit. Like, what is the goal, I guess, as far as home acquisitions or, portfolio acquisition? Like, what do you want to do in this calendar year goal-wise for you and your family?
I think my goal is a little bit bigger than me and my family. My goal is I want to help 25 people increase their net worth to above $1 million.
Love it. Good stuff. So this isn't going to be directly connected with that, but if you woke up tomorrow with $500 million deposited into your account overnight, what's the first thing that you would go out and purchase with that newfound money?
That's a good one. That is a really good one. Me, I'm probably going to ask my coach some recommendations of some other high level type coaches to build what I'm already doing.
You're such a teacher's
or to expand my mouth. I just got to keep it real. Like, I know who has helped me get to where I am. And I know that with more instruction, more instructors, especially if they're aligned, you don't want people telling you different stuff. But it'll just help me elevate.
That's a unique answer out of 200 some plus episodes I've done. I haven't heard that one. A lot of real estate investors say more real estate, but
I don't use my money to buy real estate.
Big facts. I love that. Last one. What would you tell the person that's struggling right now, that is looking to do consistent deal flow? They're struggling deal to deal. They just can't string together 2 closings back to back to sell you their life. What advice would you tell that person?
I would say that whatever your marketing channel is, be more consistent at it. Because what I've noticed with any marketing channel that I've done, it's a snowball effect. You have to keep doing it to start really reaping in the consistent results. So I would say that you need to be consistent with whatever marketing channel that you picked, because you hit it right on the head, Brandon, that they all work, but you just have to be consistent with whatever one you're picking, because then the deals will start flowing.
Good stuff. Love it, love it, love it. Well, look, I'm going to continue to follow, and I'm on all your socials, and I know how to find you, but where would you point someone who wants to learn more about you, follow back, and everything that you're doing? Because I know you're coaching others to have success and helping people raise their net worth. How can folks find you, find out more about your information?
Right. So we have a Facebook group for everybody that's interested in the buy and hold community. If you want to be around a lot of like-minded people, it's totally free. It's facebook.com/groups/The Freedom Inc. Or you can just put The Freedom Inc. into the box at the top and the group should come up. We only ask 3 questions: your name, your email, and are you a buy and hold investor, or do you want to be? So it's very simple to get in. Just answer those questions and we'll accept you. And for people that are more serious about wanting some help, or, you're in the trenches, you're trying to figure it out, and you think you might want someone to guide you a little bit more, you can feel free to reach out to me. My number is 804-495-1333. Text me, because it's probably going to go to voicemail. But
say it one more time.
Yeah, reach out to me. It's 804-495-1333. Text me, and I'll try to help you as any way that I can.
Awesome. Good stuff. And that will be in the show notes as well. Martine, this has been great. I'm super proud of you and proud of everything that you've done and how you've grown. I actually didn't know that you had made this transition, over the years. I know you were buying and holding, but I didn't know you made this full transition. So this was illuminating, and definitely is going to kind of put some fire under me to kind of catch up. But keep crushing it. And guys, as you heard, this is a great way to build wealth. While you're at it, while you're online, head over to sendmoreoffers.com. There's nothing for sale there. Just a bunch of great information and show notes from our very best guests. Best way to get a hold of me, especially if you're here in Atlanta and you're looking to get a deal across the finish line. Would love to help you. Sendmoreoffers.com. Guys, as always, Martine, I appreciate it. As always, though, send more offers, do more deals. Until next time, peace.
See ya.
That's all for this episode of the Send More Offers Real Estate Show with Brandon Barnes. But we know you're craving more knowledge to get yourself ready for that next deal. To schedule a call with Brandon to learn more about how to do deals consistently without seller appointments in a repeatable way, be sure to visit us at sendmoreoffers.com. And be sure to tune in for the next episode of the Send More Offers Real Estate Show.